Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish scenario where we're looking for this low to be the end of a corrective structure over here in a WXY for now continuation to the upside in bullish market structure where wave 1 is finished, wave 2 is finished, and we are looking for a bigger wave 3. In this scenario, the problem, however, is this wave 2, as wave 2 retraced to the 886 Fibonacci taken from the low to the high of wave 1, which is a very rare target for a wave 2 and more common for a wave B or a wave X, meaning any move coming from the 886 towards the upside has a higher probability of being a wave C or a wave Y, which in turn increases the probabilities for price to move back towards the downside to at least take the double bottom over here and hit then the invalidation at about 34k. If we do look at least bullish scenarios coming from this low towards the upside, then over here I have a double 1-2 for you. Previously it was 1-2, 1-2 and then continuation. That has been invalidated as price then wicked the low of this potential wave 2. So now move the 1 and the 2 to the right over here, but the problem you get now is that the lower degree wave 1 and 2 compared to the higher degree wave 1 and 2, because in blue we are looking for 1, 2, 3, 4, 5, and then inside the blue 3 we are looking for the white 1, 2, 3, 4, 5, meaning the white count is a lower degree Elliott wave count. The problem is that the white wave 1 and the white wave 2 are both longer in price and time compared to the higher degree wave 1 and 2, which is not what you like to see. If we then look at a normal impulsive structure, then what we actually want to see is a 5-wave structure to the upside without any overlap between wave 1 and 4, but that is the case over here because there's lots of overlap going on, which invalidates this scenario. And then finally, you have a potential expanding structure over here in an expanding wave 1 coming from this low, another wave 1, 2, and then continuation. The problem with expanding structures, however, is that they are very rare and never have high probabilities unless all other stuff fails, including the bearish scenarios. So here we're then looking for a 1, 2, 3, 4, 5, where wave 4 is either in or yet to be made over here. And then wave 2 retraced to the golden pocket. That is common for wave 2 in an expanding diagonal. Same with the wave 4 hitting the golden pocket. Wave 3 is longer than wave 1. And wave 5 has to reach at least the 1-to-1 over here, which is sitting at 35.5k. For then eventually a rejection in a wave 2. For then a 1, 2, and then continuation to the upside where you don't want price to take this low over here of wave 2 as long as the highs over here have not been taken at 34.3k. Again, probabilities in general for an expanding structure are not high. If we then look at the more corrective bearish structures where we do first move towards the downside before continuation to the upside, the first scenario here is a WXY sideways double combo. A sideways structure that is not yet finished, where this is not the end of a horizontal corrective structure and this being a 1-2 continuation, but now this move to the upside is labeled as a wave C to finish X and then an ABC zigzag, which is also a common structure in wave X. W flat, X being an ABC zigzag, and because W is a running flat over here, wave Y only has two options, either a zigzag in an ABC or a triangle. Now, when we look at an ABC, we're looking for a 5-3-5-wave structure, where then the most common target for C is between the 1 and the 1.236, taken from the high to the low of A to the high of B that we have at the moment, which sits between 33.5k and 33k. But what I don't like about counting this as a 5-wave structure is that there is overlap in a 1, 2, 3, 4, 5 between wave 1 and wave 4 over here. Now that is allowed in diagonals. However, if we would paint a diagonal over here, then wave 3 is longer than wave 1. So then you have to think about expanding diagonals. But wave 5 is shorter than wave 3, which is not allowed in diagonals. So then we have to count this as a 1, 2, 3, 4, 5 with overlap between 1 and 4, which is not really what I enjoy to see in an ABC zigzag for then a wave Y, lowering the probabilities for this scenario. If we then look at this scenario over here, then now this high is not a wave X, is not a wave 1, but now it is a wave 5, finishing one of these sub-degree waves, impulsive waves of this bigger trend towards the upside. And after this wave 5, we are then looking for corrective structure before eventually continuation to the upside here. Now in this particular scenario, we're looking for a zigzag in wave W, complex structure in a wave X, which is allowed, and then eventually a wave Y to the downside in a flat structure or a triangle. But by the looks of it here, I would prefer a flat structure where we then have a wave A looking for B and eventually a wave C to the downside to then finish wave Y and then potentially finish a wave A for a longer corrective structure. Because if we look at this range over here, then this has to be a wave 4 of a certain Elliott wave degree, right? With this move to the upside being a wave 5. But that means that if this is a wave 4, this is a wave 5, then this potential sideways corrective structure we get now is also a wave 4, but it then has is a wave 4 of a higher degree, meaning that preferably this wave 4, as it starts complex, is longer in time than this one over here, and therefore preferably passes the 1-to-1 that I took from the beginning to the end of this range over here, which is currently sitting on the 10th of November. So preferably this corrective structure then takes longer than the 10th of November. So this is something to keep in mind. It's very hypothetical, but it's still something we have to think about if wave Y is going to finish before the 1-to-1 over here. And if you then finally look at the most bearish scenario, and the only reason I put this one in is because of the potential zigzag over here, but you know, in the other scenario, in the flat scenario here, ABC. But again, I don't really enjoy seeing this. If price moves to the downside impulsively and takes these lows before taking these highs, then we either have to think about a zigzag or potentially a 1, 2, 3 to the downside, where the move to the downside is important, because if volume increases and impulsivity and parabolic moves increase as well, right? So candles, bigger candles, more parabolic to the downside, volume increasing. We might have to think about a 3. If it is more like a lazy structure, potentially a wave C. But again, the overlap between 1 and 4 is not something you like to see. It's incredibly rare and actually invalidates an impulse. So this being an impulse to the downside is not really something I am looking at, but we cannot fully invalidate, kind of like forget about this scenario. Hence the reason I do like to at least mention it. And we'll wait and see what happens locally. Now, we did have bearish CVD divergences here. We hit the resistance area very nicely indeed. And then we have basically been ranging between my support and resistance areas. Resistance hit, support hit, resistance hit, support hit, resistance hit, support hit. Very nice indeed. And constantly we had the bearish CVD divergences here as well. Bearish CVD played out. This one played out as well. This one already played out. This one played out. And then we do have some bullish CVD divergences over here. Gotta say that this bullish CVD divergence is with a very quick move to the upside. Not really structure, which is what I prefer to see. Like for example here, a bit of a structure, retracement, and then eventually bearish CVD is preferred. But hey, we do have some bullish CVD. Price at the moment at support, but it already hit the support 3 times. So if it moves towards the downside, looking for the next blue box that I have over here, which can then act as support at 34.3 to 34.5k. We also have news this week on Wednesday over here at 15 p.m. Central European Time, and also on Thursday 8 p.m. Central European Time. We have some high impact news, the red flags over here, which can introduce more volatility. So make sure that you trade safe. And if we then finally look at the probabilities of the different scenarios, then in general, based on the lower time frame counts, the probabilities are higher for the bearish scenarios, as this bullish scenario over here carries lower probabilities, and that increases the probabilities for this WXY or this zigzag to the downside, and then an ABC4 wave Y to eventually take the lows. But as explained, I don't really like to see this as an impulse. It works much better as a 3-wave structure to the downside, and therefore on the micro, grabbing these highs before these lows have a higher probability at the moment for me as well, based on Elliott Wave theory. Of course, it's not about what I like, it's about what Elliott Wave tells us, because a zigzag to the downside in an ABC, well, the overlap between 1 and 4, not preferred. So this is definitely something I'm keeping my eye on, where potentially price can move to the downside, hit the support box, then move to the upside, potentially hit this box again for the second time, and then move to the downside once more to hit this lower support box, which is sitting over here, which I didn't yet mention, sitting between 33.8, 33.9, and that also then gives price the opportunity to take the double bottom here, also take the double bottom over here. So grab some liquidity before potentially then a move towards the upside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.